if you're in construction and you own your own company, you are just a natural born gambler, because that's what we do. We gamble. We're saying that we can complete this project for this amount of money, but also that we're going to submit a bid that's not going to be too high. We have to be in that sweet spot of it's not too low to where the project can't be done, and it's not too high to where the project doesn't happen.
And we took out some of the variables like other general contractors, right?
Oh, yeah.
There could be 10 of those bidding against you.
Exactly. And you know what's funny is the general contractors are playing the same game, because they're submitting bids based off of what they're doing, and we're compiling all that, and we're having to use an amount of trust to take what they're giving us and submit that into our cost structures.
Welcome back to How to Invest in Commercial Real Estate. And today, as you may notice, we have a guest, Tyler Detring, with Ascend Commercial Builders. And also, just as important, podcast. You know, if you're joining us on YouTube, if you're watching us here, podcast is a little less handsome and buff today.
Yes.
Joel is on vacation.
Yeah.
So we wore our fun shirts today. Yeah, anyway, we're going to hop right in. Tyler, we've had you on before, but give us a little background about yourself and Ascend and what you do.
Yeah, so I'm the owner of Ascend Commercial Builders. You know, we do large renovations and new builds anywhere from about $200,000 to about $5 million, and we're loving life and building a lot of stuff, and it's a very interesting time in construction, as you know, and but man, we're just having a good time and really enjoying what we're building and kind of what we're working on.
Yeah, so I think you kind of hit it there in the intro. It's a crazy time right now. It is a crazy time. So typically when interest rates start to go crazy like this, the first thing it hits is it puts a lot of downward pressure on construction.
For sure.
Because most construction loans, I don't even want to say most, a lot of construction loans have floating interest rates until the building is done. So most people don't want to take the interest rate risk because the Fed is hiking rates up, 75 bips last month, 50 bips the month before that. They'll probably do it another 50 bips next month. And who knows when it's going to stop? Who knows when it's going to start to come down? So it puts a lot of anxiety and pressure on your industry.
For sure.
Excluding the fact of, everything with, the shipping delay. I mean, it's a crazy world for you.
Anybody
right
building wants to build as quick as possible, right?
Yeah.
So that before the interest rates go up any further.
For sure.
And various other reasons, of course, but just want it done as quickly as possible.
Yeah,
and as cheap as possible.
For sure. And I see a trend maybe away from new build and more towards bigger renovations, people taking existing buildings and doing more renovations, more leasing, because we're still seeing heavy demand. That hasn't changed. But I definitely see that there's going to be a slowdown in new construction. What are you guys' thoughts on that?
Yeah, I mean,
that makes sense, right? Yeah. Take an existing building and renovate it.
Sometimes I wish I could pause the existing construction. We'll just pause, pick it back up. Yeah. We kind of joked about it when we started the building, but when we started, it was a crazy time. It was right before COVID. I mean, the January of 2019, 2020? No, 2020. Like so January of 2020 was kind of the first meeting. Yeah. And then, March happened. And after that, it was like, well, what do we do now? It's either going to be double or half next year. Yeah. There's no way to tell. Yeah. And it's way closer to the double side, right? Like sure. Nothing lowered.
No, nothing lowered.
So, dealing with that, can be an issue, I would imagine.
Sure. Yeah. Yeah. I think like we kind of talked about earlier, I think disappointment at any point comes whenever expectations are busted. So, but what that means is what someone expected it to be. If it's somewhere else than that, there's going to be disappointment on all sides. Right. Yeah. And so that comes from a lot of different areas, just from the front. When are you telling that person that the estimate's going to be ready? If you say, hey, the estimate's going to be ready on March 1st and you don't get it there until March 10th, that's an expectation that's been busted. If you would have initially said, hey, it's going to be March 12th, we need about 4 weeks to get this estimate, and then you get it in on March 10th, the result didn't change, but the expectation was set in the beginning. Yeah. Does that make sense?
Yeah, 100%.
And that's so important just from the start of setting the expectation of how you do business. And it's always better to kind of lower the expectation and then overachieve. I know that's such a common principle, but it's so rarely.
It's rarely executed upon.
Oh, yeah.
I mean, we dealt with that in the Criterion building. There was people we would engage and they'll be like, hey, I'll get back to you in a month.
Yeah.
That's fine. Take a month. A month is a long time. You can do a lot of stuff in a month.
Oh, for sure.
So then there's the person who says, oh, I'll have it to you Friday.
Yeah.
And Friday, hey, did you get that thing? Next Friday.
Yeah.
Hey, did you get that thing? Next Friday. Hey, why didn't you just tell me it was going to be weeks? I mean, busting your own expectation, I think, is the worst kind. An unknown expectation or somebody else's expectation. I mean, that sucks. But like your own, come on.
Are you building in a gap right now between what you're telling people as far as expectations? Are you saying, okay, well, do you actually sit down with them and say, okay, this is what we think, but here's what's going on right now. Mm-hmm. Maybe, it may be as late as construction may be delayed by this much or anything like that. Are you making a concerted effort right now more than ever to set expectations?
Yeah. So we just built a schedule on an addition. It's 16,000 square foot addition, and we built in a month and a half of contingency,
which is more than you might normally.
Oh,
is that right?
Absolutely. Okay. And that's based on several different factors. Hopefully we don't have to use it, but as my project manager says, we'll use every day of it, which, if it's there, you're going to use it. That's the
problem.
And so that's why I'm reluctant to do that.
Yeah, right.
Because I don't want my subs and my project managers to think that they have that time. That's that same expectation. Hey, I've got this much time. I'm going to take every single bit of it plus a couple days, right?
It's almost like you need two different schedules, right? Yeah. Like an external schedule and an internal schedule.
It's so hard to do that.
But even for the people that are working for you, right? If they know they have this extra month and a half just in their mind.
Oh, yeah, just in their mind.
They're thinking, I don't have to work towards that. I've got a little bit of leeway. Absolutely. But you want them focused on that original date.
Yeah,
absolutely. So I think the theme of all this is if you say you're going to do something, you have to meet the expectation. Oh, yeah. And especially in the first impression, which maybe not first impression, let's call it, but the estimate, right? Yeah. When you're providing an estimate, hey, it's going to be due. See, I'm already in the table. Yeah. It's already happening. When you say your estimate's going to be due July 1st, it better be there July 1st. Yeah. Because if you can't even meet that expectation, then all of the other important ones, you have less faith in.
Well, we don't need to get on this tangent, but I think that's so important because that's the first deliverable, right? Like as a contractor, we have so many deliverables through a project. Yeah. Like my job is to produce things, which is really tough. But that first thing to produce is an estimate. And so we've already had the contact. We may have set a good example, but if we don't deliver a product or in this case, an estimate, when we say we will, that's a problem. And that's the first kind of expectation that's busted. And kind of on that topic, another expectation that we set from the beginning is what is your client expecting the cost to be, right? Like if they're expecting it to be $1.5 million and you come in and you say, hey, it's going to be $3 million, which happens more often than you think, that's a problem.
See, I wouldn't even think that would happen very often. I mean,
dude, it happens all the time.
That's funny.
All the time. Because the project we're working on now that we should have a contract on any day, we were told that the budget was $1.5 million and the contract amount will be $4 million.
And they're going to do it.
And they're going to do it.
That's crazy.
And that's without any major scope changes?
No scope changes.
Wow.
None at all.
Where did they get that original number from?
I don't want to say.
Okay. Well, you don't have to say.
Yeah,
but
we're not.
Maybe that's one lesson.
Professional people gave that number. They said $100 a square foot for light industrial edition, and it was wrong.
So I think that's maybe a note. Go back and watch the first time we had Tyler on the show, and we talk a lot about the relationship between the general contractor, the developer, and the architect. Yeah, because those are three very different things with three very different opinions. Yeah. But to stay on here, I think it's super important. As Criterion's a developer, so the relationship between Criterion and Ascend is a super important relationship because all of these developments start on paper. It starts on some back of the napkin Excel sheet. It starts on, if it starts on a tenant relationship. Yeah. Hey, if we could deliver a building like this, would you sign a lease like that for this long and pay this amount of money? That's conceptually how it starts. Yeah. The next important point is people almost think that developers want to build ugly buildings or functionally, not working. It's like as a developer, you want to build the nicest building you can because you are the developer. You're getting, the hey, I developed this building. This is what I can do. This is what I can make work. Yeah, but it's 100% a factor of your ability to find tenants that will pay for the building, right? Or your ability to make no money on the building. But at some point, the building has to be a reflection of how much money it makes and how much it cost, right? And like I said, it starts on an Excel sheet. It starts with that first estimate, right? So how do you, as a builder, price a building? Just generally price a building, pricing in, not wanting to disappoint them immediately, not wanting to change order the thing to death, pricing in enough profit, pricing in, just general life. How do you do that? Because if you're too high, the project doesn't come to fruition. Yeah. Like, if we wanted to build this building, we were thinking $1.5 million and you come back at $5 million. Like, I was surprised when you said they were still going through, because I would think they would cancel it. I would think that would kill the deal. Yeah. So how are you pricing things?
Yeah. So first of all, if you're in construction and you own your own company, you are just a natural born gambler, because that's what we do. We gamble. We're saying that we can complete this project for this amount of money, but also that we're going to submit a bid that's not going to be too high. We have to be in that sweet spot of, it's not too low to where the project can't be done, and it's not too high to where the project doesn't happen.
And we took out some of the variables like other general contractors, right? There could be 10 of those bidding against you.
Exactly. And what's funny is the general contractors are playing the same game, because they're submitting bids based off of what they're doing, and we're compiling all that, and we're having to use an amount of trust to take what they're giving us and submit that into our cost structures. But on another note, so it's just finding that happy medium of where the price needs to be to happen, while not being too low and not being too high to where it doesn't happen.
So do you think that helps with your initial price expectation when they're saying, hey, here's my budget? I mean, but like you said, how do you even have the conversation of, you had $1.5 million expectation and I have a $4 million number?
And we get that call all the time. We get the call saying, hey, I want a X amount of square foot building. And my guys don't like asking this question because they get weird asking about money. But I have no problem saying, hey, what is your budget? Like, do you have any kind of idea of what's this going to cost? Yeah. And people get really weird when you ask questions, but just being upfront and say, this is not going to affect my cost. This is not going to affect my pricing, but I just need to know, like, is this a building that's even halfway feasible?
Again, it's about managing expectations.
Absolutely.
Right?
And every single time people have no idea how much things cost. Like, either people come from a home building aspect where they say, hey, I can build a lot of house for $200,000. Well, you can't not build a lot of commercial building for $200,000. I mean, that's just not going to get you very far. So that's kind of the first step, is seeing where the expected cost is going to be. And that will really kind of weed out people in the beginning of just saying, hey, that's just, they may just be kicking the rocks. They feel like they have a lot of money, and they do have a lot of money, but it may not go very far in commercial building.
Now that you tell that story, I remember when we were building this podcast room and we had you do an estimate. Yeah. You know what your first question was?
Yeah.
What do you expect it to be?
Yeah.
And fortunately, the number I had was close to the number that you guys were giving us. So
you are a lover of fine things, so you understood.
Lover of fine things.
I don't disagree with that.
Yeah, people can't see your house, but you have a really nice house. So you understood the cost of things. And even though it's a residential project, in a lot of ways, this is built in a commercial way, other than a certain amount of things, but it's just expensive. It's expensive to build nice things. And if you want it to look nice, it's going to cost a lot of money. So that was a scenario where it's like, yeah, you were really close to where it was. And
well, quite honestly, I took what I thought it was, and then I added 50%.
There you go. There you go. Yeah.
Which is a reasonable thing to do, especially now. So
yeah. Now I want to go back just 1 second, because what you talked about was being on time and all that. Yeah. And I used to be in the equipment manufacturing business, and one thing I told my people was, okay, we're going to tell them what it's going to be, but if we miss that by a day, or as soon as it's delayed, you need to contact the client. You need to contact the customer and tell them. Don't wait a week and then say, oh yeah, what was supposed to be ready a week ago? Well, it's not going to be ready for 3 weeks. Yeah. I want you to tell them, I want you to call them, maybe not even the day it's supposed to be ready. If you know a week ahead of time that it's not going to be ready that next week, call them as soon as you know. Yeah. And if you don't know the whole story, tell them what you do know. Absolutely. And keep them informed, and they're gonna build some trust with you. And then by the end of the project, where they've had a few delays, they're gonna trust you that you did the best you could, and that and they're gonna appreciate the fact that you kept them informed.
I think that's a great point, and it's so important. There's an art to delivering disappointment, because you could talk to 100 general contractors and you could have 50 of them that say, we don't have mistakes on our projects. Our projects all go really smooth. They're all great. We do great things. And that's just the biggest lie I've ever heard in my life, because every GC has tons and tons of problems. Because we all use the same subs.
Yeah. So talk to us about subs a little bit.
Yeah.
I'm going to assume that you want to stay on them. You want to use subs you've used before.
Absolutely.
What's your thoughts on that?
Yeah, absolutely. So like I said earlier, anytime there's humans involved, there's going to be disappointment. There's going to be problems. And so whenever you work with subs, if you think about a sub, they're hiring people to deliver them a product to use in the building.
Yeah.
And that person they're buying it from is buying that product from someone else. And that person, that bigger supplier, is getting their stuff from the manufacturer. So there's 3 lines. There's really 4 different entities that touch it before it hits the job site. And so there's so many different areas for that to be a big disappointment. There's trucking, there's materials that haven't gotten there, there's chip shortages, there's metal shortage. I mean, there's so many different things.
Labor. I mean,
labor.
Once you get all this stuff there from the 4 different suppliers, you have to.
And they may be it may be sitting in a factory, but they don't have anybody to go in the factory and deliver it to the truck to ship it to wherever it's going. And so, what we do is we ask the sub, hey, what is the lead time on X? Let's say it's an HVAC unit. Okay, they're going to say, hey, it's 18 weeks. Okay, give us a receipt. Let us know when you've bought it. We need to see proof that you've bought it, because that's the first step. Like, a product can't start being manufactured until it's paid for and ordered, right?
Yeah.
So once that happens, then we have an internal clock, or we have something set as reminders to check on those things. So we'll probably check every 2 or 3 weeks. And when it gets closer, we'll check every week. And when it gets even closer, we'll check every day. And the questions from the answers from the subs is almost always the same. Hey, I don't have any news on this. Okay, well, will you call and check on it? I know that they're going to tell you the same thing, just pound rocks, but that's okay, because we're going to be the squeakiest wheel. And our subs to their vendors, they're going to be the squeakiest wheels. They're going to be calling them and checking to make sure that they've done their duty, because the vendor can drop the ball because they haven't submitted a PO to whoever they're buying it from. So there's just so many different areas, but we can do everything we can by following up and following up and following up and being the squeakiest wheel, because I guarantee you, if we're not, somebody else is. I mean, who do you think that the sub's going to respond to better? The one that's just, you know what, HVAC guy, I know you're going to take care of it.
Yeah.
You're a great guy. We go to church together. I know you're going to take care of it. I know you're going to get it on site. No, I can really have a lot of respect for you, but also just have a distrust of anybody in the industry.
Well, especially now, it's not even distrusting the people in the industry. It's distrusting the current supply chain we're in.
It's the process.
It's just
the
accepting what it is,
the whole thing,
and saying, hey, we have to be extra judicious and calling these people and checking in.
Yeah.
And I think that's out. It's bigger than just construction, right?
Yeah.
It's any sales whatsoever. It's any manufacturing whatsoever. It's almost every single business out there. You've got to be touching base. There's people that, oh, this is a good one. So we have to deliver K1s every single year, and we have to deliver a lot of K1s, a lot of K1s. The reason most people don't take $5,000 investors or small investors or even $25,000 investors is because it's a point of contact. It's K1. And at the end of the day, in the scheme of the building you're buying, it's not a lot of money, even though it is a lot of money.
Yeah.
Some people don't care about their taxes at all. They don't care if they're filed. They don't care if they file them in January or December or the next year. Nothing matters. And then there's some people who, if they don't file their taxes by April 15th, they're going to have a heart attack. I think we've lost investors because we didn't get them K1s as fast as
some of them
they wanted.
January 1st, I think.
Oh, absolutely.
I mean,
And it is January 1st. It's January 1st. Hey, are K1s ready?
Yeah.
Come on, bro. It's January.
Yeah.
Nothing's ready in January. Nothing. I haven't even seen the financials for the last quarter,
Yeah.
So, and it's construction, but it's everything, right? There's people who email to invest or email to set up a call or everything. Every now and then something gets dropped through the cracks or whatever, but the squeakiest wheel or the, like you said, that's how you get it done. You have to be persistent. You have to be consistent.
Do your subs, do you ever ask for progress reports? I mean, like, okay, give me a weekly progress report on the building of this HVAC unit or something like that? Do any of them offer that sort of thing?
No, it's more of
we used to do that in our business, but
the problem is they can't get that. There's such a high demand that the suppliers and the manufacturers, they don't care.
Yeah, I could see that now.
They don't care. And so when you have your sub call their vendor is like, man, if we call, like, they might just put us in the back of the line. And you know what? I believe that, because the manufacturers, they're having more strain than all of us. They are having huge chip shortages, labor issue. I mean, it's all the same.
Yeah.
And so the truth is they just don't care. Like, and that's just a fact on all the huge equipment orders, and it just, yeah.
So how, taking all that into consideration and considering, like we said, estimating is probably the lifeblood of a construction business.
Absolutely.
How do you manage all of that?
Yeah.
I mean, that's a lot. That's a big burden to bear. And that's your burden.
Yeah. We've got to get shots on goal. I mean, if we're not getting shots on goal, we're not scoring. We have to get a certain amount of estimates out to actually turn those over into projects. But there's just so many factors at play, and we could do a whole podcast on how to estimate, because there's just so much to it. But the important thing is knowing the kind of the expected cost, knowing what the time frame of the project is. If the project is a year out, that will definitely change our estimating tactics, because we're not, it's more of a kind of shot in the dark, and then we're increasing it by a certain amount just because. But even that, that becomes difficult, because like we talked about, if it's too high, it won't even happen. So it's just, there's just so many things at play. But, the way we estimate it, it's, we take historical data based off of what we've seen most recently, which, is now in the last month. Yeah. But then we're taking subs information of what they feel comfortable with, and we're getting that in writing, because it's so important that they say, hey, we feel like this is a good budget number. Like, we're working on one right now. And the big deal was the metal building, because metal building has been, pre-engineered metal buildings have been really, really tough to get and really expensive. And the number that I had, for some reason, I estimated it super, super high. And I called the guy, and he told me, hey, I think it's this number. I said, okay, send it to me in an email on a PDF of what a budget number to put in. And the number, whenever you ask them to do stuff like that, either by schedule or by price, it's always going to go up, because they're trying to cover their base. But the number that they sent us ended up still being lower than what I had budgeted, because I had budgeted so astronomically high to just try to cover our bases. But you're taking historical data, you're working with subs that you trust, that are going to do the best job they can with the information that they have. And you're taking all that information, you're putting it together, and you're really, like I said earlier, you're taking a gamble, and you're hoping for the best, that it's going to turn out good.
Yeah.
Well, it hadn't gotten any easier for you. I would have thought, here we are at the end of June 2022, and COVID's kind of going away. Maybe prices are coming down, and now all of a sudden we've got inflation. So
yeah,
now you don't know what to expect again, right?
Yeah. Well, so here's another problem that I see with inflation and with the cost of materials and goods and labor for that. So let's say Joe Blow electrician. Let's say previously he was charging $150 for an outlet, and now the last year he's been charging $185 an outlet. Okay, so doesn't sound like much, but if you have 150 outlets in a building, that's a lot of money. Mm-hmm. And that price also goes to lights and all these other things. So let's say that's how he estimates. Do you think now all of a sudden he's just going to lower his number back to $150?
Yeah. No way.
No, because he's not taking the hard number of the actual amount of copper per foot. Like, he's taking, hey, this is how much I know it's going to take to be profitable on this job. Mm-hmm. And even if the price of copper goes down a little bit, he's not going to go in and just change his number. It's not going to happen. And so there's several problems, but one of the problems I see is that people have been willing to pay these higher prices. And how do we back off of that if the market is still paying for these prices?
Yeah.
Because me personally, I don't care what the number is. I just want the job, because all we do is we take the numbers from the subs and we put a markup on that. I don't care if it's 100,000 or 150,000. That's a small, minute change. Like, that doesn't make a difference to me, and my pricing doesn't change based off of inflation, but it does because of what the subs submit to us.
Right.
And so I'm super concerned that the market is still paying these inflationary prices, and we're going to have to have some type of correction to get it back to normal.
Yeah.
And me as a business owner, that scares me, because if there's a correction, that means there's a slowdown in construction. There has to be to get it back down.
Yeah.
But if there's a slowdown in construction, that hurts my business, but it could be overall better for the market.
The only way it slows down is, or comes down, is if, like you said, there's oversupply. And so all of a sudden, people need to drop their prices to get jobs, right?
Yeah.
Right now, there's just so much demand, they're not going to do it. But eventually that could swing the other way.
Yeah, and people aren't working. People have to get back to work. I don't know where I don't know where the labor is.
I don't know where they are.
I think there's a stimulus check going on in California to curb the inflation. Can you believe that?
To curb the inflation.
To curb inflation.
That's a true thing.
It's a true thing. Yeah.
Oh my gosh.
Yeah.
Whew.
So that's just the state of the world right now. We're giving people money to curb inflation.
Yeah, inflation's going up. Everybody's prices are going up. Here, have some money. Here's inflation to help pay for that inflation cost. That'll solve it.
This is wild. Yeah.
Makes no sense. But anyway, developers, construction companies alike, there's a lot. And I mean, that's the idea of the Fed raising interest rates is to slow growth. I mean, ideally it doesn't go negative, and still stays to where we're growing as a whole, but just not as fast. And generally, I've been telling almost everyone I know, now's the time to start a business. I feel like if you can start a business and provide services, there's a line of people waiting to get them. I mean, a reasonable service, but you can think of so many, like any in construction. Yeah. If you can actually get a hold of the materials and the labor, you have business waiting out the door.
I was telling my friend, or I was telling Nick, my estimator, I was saying, man, if I could start I would start a plumbing company, an electrical company. Like, if you look at the average age of plumbers, it's just a bomb. It's just so bad. It's so bad.
It's high.
Oh my gosh. Okay. Just look at at any job site and look at the plumbers or the electricians. Electricians is not so bad because it doesn't have so much of a stigma, but like plumbers, the average age is like 56 or something like that. And there's no new plumbers coming in. You never see young
I know some rich plumbers.
Oh, and it's not honestly a dirty job, because you're doing a lot of new construction plumbing. And the highest paid plumbers are what? They're the ones that are doing the service calls, and they're getting paid a ton of money because nobody wants to deal with poop. Nobody does. So, but you can still make a ton of money doing new construction plumbing, where you're dealing with new PVC pipe, new fixtures, new water. Like, it's a great job.
Yeah. But
nobody's doing it. And so there's got to be a snapback to the trades, because we desperately need them. It's pretty wild.
Interesting.
Well, that is interesting. Well, I don't know if I have anything else, Brian.
No, I think that's all my questions for Tyler.
Yeah, I really appreciate you coming on the show, man.
Real quick, I don't know if anybody does this, but I just want to gas you guys up. You guys are incredible. You guys are doing an awesome job.
Nobody does that. Come on.
I'm here.
Give it to us.
Let's get some clips of this, man. Like, you guys, you created this thing. Like, when you first did it, you weren't sure what you're doing, but man, you're just jumping out there, putting yourself out there, and the more you put yourself out there, you open yourself up for criticism. And I'm sure you guys have recognized that. You're aware of that. And you may have gotten some criticism. You may have gotten some people say, man, what you're doing is stupid. What you're doing is dumb. But you guys are awesome. You guys are just killing it. This is incredible exposure. It's a high quality product. And it didn't start this way. It's come a long ways and gotten better. But guys, it is awesome.
Yeah, thanks.
We've started a podcast, and man, I can't wait until we get to where it's a high quality product with what you guys are doing. And I can see the path because I've seen that you guys have done it. And man, you guys are awesome. Just keep it up.
Yeah. Well, I appreciate that, man. Yeah. You built the studio, so thank you.
Yeah, absolutely. Yeah.
Alrighty. Well, we will be back next week with another episode of How to Invest in Commercial Real Estate. Joel will be with us, but Brian will be out now.
It'll be my first podcast I've ever missed.
Oh my gosh, the dedication of this guy.
Anyway, that quality is going to go down that Tyler was talking about. But
thanks again, Tyler.
We'll send the expectations, though.
So. Yeah, we're setting expectations here.
All right, we'll see you guys next week. Thanks. That was funny.